Howdy folks, good afternoon, good evening. It's Dr. Jeff Camarda, and welcome to This Week in Wealth with Jeff Camarda. What a week it's been. It's now November 5th, Thursday, 2 days after Election Day, and we still, obviously, there's a lot of uncertainty out there. And before I read the script, and this is in deference to those of you that have requested a transcript of my videos, and which have become very extemporaneous. I've just really been talking off the top of my head. But in order to accommodate you, I'm writing my remarks in advance. So you should get those along with the video link email. And I'll go ahead and read them from my impromptu teleprompter here in front of me. So election week, what a drawn out, bitterly contested Joe Biden-Donald Trump election it has been, and what does that really mean for us as investors and those of you that are retiring or retired or facing retirement? And as I wrote this late the day after Election Day, the world still remains in very deep flux. The election obviously is still undecided. I'm sure all of you know that. This is something that really has struck a very deep and resonant chord among the entire U.S. Population, it seems. And what both sides preparing recounts and lawsuits, it may not be for some time that we know what the results are, even if official winners are finally called with the potential, well, I shouldn't say the potential legal contest, with the legal contests that are already starting to unwind. The Trump campaign says it'll sue to stop ballot counts in Michigan. The late report is that a judge has denied that request, also in Pennsylvania. Postal data show very poor mail-in ballot delivery in key areas, which means still a lot of bags of ballots to be counted, which still twists and convolutes the paths for Joe Biden and Donald Trump to win decisively and claim the minimum 270 electoral votes. So far, the markets have cheered this news, with global stocks gaining on the U.S. election data, and U.S. Markets doing very well. In fact, with tech shares surging in U.S. markets. Now, this has been widely attributed to the pundits to the strong prospect of a split Congress, and with it looking like the Democrats will hold the House and the GOP will hold the Senate. It's still not, completely decided, but it certainly is leaning hard that way. And while this portends more gridlock, it also cuts the odds of big tax hikes and regulations dampening the economy anytime soon. Now, personally, I also think the relative calm of this election week was a factor. Relative is a relative term, but while lots of dander is up across the country, and we've seen scattered protests and riots, it could have been lots worse. Many predicted it would have been much worse. So I think that's probably been a factor in the markets cheering the news. The split Congress also lessens chances for the massive fiscal stimulus that the economy, in my view, desperately needs. The Fed is holding rates steady, but signals continued fear, as well it should. It can't do it alone and really needs big government spending to juice an economy that's still very much on life support. But with the Republican Senate, if it holds true to its comments in the recent weeks, chances of a truly massive bill becoming law are pretty dim, regardless of who is eventually crowned president. Now, all this on top of worsening COVID news, at least in the West, in Europe and the United States, with U.S. daily coronavirus cases topping 100,000 for the first time, and new lockdowns emerging in and increasingly infected Europe. And it's probably going to get a lot worse here before it gets better. Many of you may not know it's really become a tale of two COVID worlds, with much of Asia, including, Western culture, Australia and New Zealand, but with much of Asia pretty much virus-free now, while the West is pummeled really with no end in sight. And who would have thought that China would quickly become a low-risk country? It has, amazingly. It has. For us, I fear that there's much more pain in store as the cold months loom and Americans tire of COVID and drop their guard even more. But still, the market parties like it's 1999, And I think that probably won't continue, but certainly the good times seem to be rolling, at least for a few more weeks. Anyway, that's it for this week in wealth. You'll have more soon. Hopefully we'll have an answer to the presidential contest relatively quickly, and a smooth transition of power or retention of power. Certainly don't want any more conflict either way. And that's it until next week or sooner if news demands. This is Jeff Camarda. I've got to apologize, by the way. I got to try to tweak and see if I can get a better teleprompter. The image of the video is down here, and the text is up here, and the camera's up here. So it's going to probably take me a few go-arounds to get my eye lecture right. But in any event, good evening to you all. Good health. Be careful out there. It's going to get worse. Do not let your guard drop down because there's still, very, very dangerous conditions in this country, and that will continue sadly for some time. Anyway, that's it. Have a great night. Thanks.